this is Alex with MasterChartsTrading.com, and this is market recap for Friday, May 15th, 2020. As always, please hit the like button, subscribe to this channel, and share this video with others. Not much has changed since last week. Stocks are basically stuck between support and resistance. We'll look at the chart and I'll show you where those are. NASDAQ has already broken out, nothing new here. Small caps are actually likely held support, and this is generally a good sign. I want to do a little bit of a boasting for my subscribers, as they are up over 85% on Myocardia stock. We're still waiting for junk bonds. They're still range bound. We're waiting for the Fed to start buying. Treasuries still might pull back a little bit. And we'll look at natural gas. I shorted myself. I bought puts on UNG, and it's up over 50% in 7 days. So pretty happy with that trade. And copper looks like it might retest March lows. Let's see if it does or not. Another very nice trade we just recently did is gold, and I actually still have a position, and gold miners up over 41%, so congratulations again. And Bitcoin may have entered the bull market, so we'll look at that. Alright, so let's look at S&P 500 futures. As always, throughout the presentation I'll be using my proprietary trading indicators, and they're called MasterCharts Trading Price Action Indicators. Right there where I'm hovering. To get them, all you need to do is go to MasterChartsTrading.com. That's one word, MasterChartsTrading.com. Click on sign up and sign up for either trading indicators or the ultimate package, alerts and trading indicators. Of course, I recommend the ultimate package because not only you get to trade on your own, you also get tons of examples that I send out on a daily basis by email. So check that out. So throughout the presentation, again, I'll be using these indicators. What are they doing? These indicators, they paint, they actually draw a support and resistance lines for you. So again, these are mathematically calculated, so I did not draw them in by hand. These are calculated by a mathematical formula. So what I'm seeing here is I think there was a breakout just barely here on the 29th of April of this year, and since then you can see there was another attempt here on the 30th of April, and then on the 8th of May, 11th of May, and 12th of May there were 3 more attempts to clear this resistance, and they all so far failed. So ideally we should see just a strong breakout and continuation higher, but it's anything is possible in the stock market. So the breakout may never come, and in that case a good support is at 2632. But unfortunately, if that gives, I think we may quite likely see a retest of March lows, which would imply we're going to go back into a bear market. For now, I think we have switched back into a bull market here where I'm hovering on 29th of April of this year. Notice the QQQ, the NASDAQ, actually broke out even earlier here on the 14th of April versus S&P, which I think broke out on the 29th of April. So QQQ, the NASDAQ 100, actually is approaching all-time records, very close. So once again, normally stocks do not behave that way, do not make new highs during the bear market. So if new highs are made here in the QQQ, on the QQQ and the NASDAQ, then I think it's unequivocally in a bull market. IWM, the small caps, actually acted quite well today specifically. You can see where I'm hovering, a relatively big candle, a bullish looking candle. The important thing is it's at support. You can see this again at the red line right now. So I thought we're gonna get we're gonna break down, but so far we actually held the support, and this is a very hopeful sign. So I would not be surprised if we see a nice push higher here towards the breakout levels. For IWM, which is lagging, it's at 142 where I'm hovering. That would be a bullish level. Alright, so here's one I wanted to boast about, and this stock is called Myocardia. I don't really, know what they do. I just happen to kind of follow it sometimes. And in fact, yes, we did trade it. There's the breakout where I'm hovering. I'm gonna go back, as if, right now it's back in April. So here's the 20th of April breakout. Alert, I sent an alert on the 27th of April, several opportunities, in fact many opportunities to get long, and it just took off, gapped up and never looked back. So over 85%, again, congratulations if you opened. Okay, let's switch gears a little bit. Now we're looking at junk bonds, high yield bonds. So these companies that comprise this ETF are, sometimes they're downgraded, they're very low credit quality, perhaps they have defaulted in the past. So again, there's a few, I keep saying the same thing here on the 9th of April, right there where I'm hovering. The Federal Reserve came in and said, okay, this is it, we're going to start buying junk bonds. So they started buying junk. They said they were going to start buying junk bonds. This actually hasn't yet happened. So the price has pulled back since then, and you can see the gap is basically closed, maybe a little bit more. So if we see a pullback, especially towards 93 and maybe like a bottoming action here, it could be an opportunity at a very reasonable price, at a very low risk too. Because if we're going to enter around 93 here where I'm hovering, then we'll put our stop around 87 where I'm hovering, and that's a very small risk versus if we're buying on breakout like we did here on the 9th of April, because the stop is still at the yellow line. So perhaps the risk will get reduced even more. And eventually Federal Reserve will actually start buying them, or perhaps they'll get cold feet, maybe, I don't know. Here's municipal bonds, very interesting pattern. So here on the 12th of March we said avoid, don't buy. I would not touch it at that point because it's just completely, this is what we call cratered, and then it just came right back. So I'm guessing it's the same thing with the municipal bonds as it was for junk bonds. The Federal Reserve basically said, okay, that's it, we're going to start buying them. They wiped out the shorts and started at least saying they were going to start buying this ETF, if I'm not mistaken. They did stabilize the market quite well. You can see a couple more opportunities. These are actually alerts right there. One is on 7th of April and another one on the 27th of April. So yeah, two opportunities, and in fact this is already profitable, so you could have made some money already. So treasuries, a few weeks ago I said they were gonna have to pull back significantly. They haven't pulled back where I want them to go, and that's around 159. That's an ideal place for them to pull back, and then once they do, then definitely that's definitely they have bottomed. Right this instant I think it could still just trade sideways, but I need a pullback towards the blue line at 159.30 to to get a strong signal. I want to start buying around 159 basically. And let's switch gears again from the bonds. Here's natural gas futures. So I don't have a futures account. I do have I can just trade over the counter stuff. I just trade ETFs and ETNs. So to trade this trade, you can see I shorted it on the 6th of May here. Why did I do it? Why did I short it? I mean, if you look at this chart, it's very obvious. So we're seeing a security, an instrument that's been trading, basically down, 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 and then it rallied, and it came up above the red line. So in the when we're trading on the downside, we're reversing our thinking. So again, with the indicators, the master charts trading indicators, we need to see first a breakdown and then a pullback. So this pullback is what happened. So here's the actual trigger, is that we see a high above the red line on the 5th of May and then a close below the red line on the 6th of May. This is exactly where I entered on the 6th of May. I bought puts on UNG. In other words, I was placing a bearish bet on natural gas. I was proven completely correct, so I immediately sold. Few days, actually 2 days later, I was already sold 1/2, and I advanced my stop to entry. So at this point, I cannot lose. But you can see the natural gas collapsed even lower, and now it's very close to new lows. So I would again not be surprised if it just breaks down even more. So natural gas, the way I'm playing it, I bought puts. I placed a bearish bet. You can see that the drop for the underlying for the natural gas futures price was 19%. You can see where I'm hovering. Yet my UNG put is up over 55%. The one that I didn't sell, the part that I didn't yet sell, because I sold half the position here. So this is, just shows you how much the options moved. So it's moved 20% on the underlying, yet the option moved 55%. So almost double. Actually, more than double. So that's how I've been playing many different commodities of late, and I've been kind of liking the options more and more because of the limited downside. You only can lose as much as you buy. You cannot lose more than you buy. So that actually helps with psychology of trading as well, because some people have hard time exiting if they are wrong. And in case of option, well, you just buy an amount that you're okay with letting go. Don't buy more than that. And if you're, let's say your account is 100,000, then normally you're okay. You should be okay with letting go of about $1,000. So you can buy $1,000 worth of options and just sit in it and see what happens. And if it doesn't go your way, then you can sell it. But even if you don't sell it and you feel like psychologically you're somewhat weak, and people are like that, then not a big deal. It's about 1% of your account. So that's not the way of tricking yourself in this game. Here's copper, very interesting price action. So again, new lows on the 19th of March, bounce back. So opportunity. I'm gonna actually mark the chart. I don't think I sent this out, but there's the opportunity on the 20th of April, and it seems like another opportunity is brewing. I thought it was gonna go higher and break out, but it doesn't seem that way, and I want to see another close below the red line, and then maybe I'll try and short it, although I don't see a good way to short it on the retail level. So we'll need to figure something out. In Europe, and rather not in the United States, there are some wonderful things called CFDs, contracts for difference, which unfortunately are not available in the United States. So this is yeah, so if you have futures account, then you can trade copper as well. All right, let's switch gears again. Here's gold, XAU USD. So XAU USD actually made a new high. GLD also made a new high, while the futures are slightly dragging for some reason and didn't make a new high. So overall, obviously gold is an uptrend. This is my position in gold GLD. I bought on 23rd of March. Why did I do it? Again, the same exact thing. So we have an uptrend in security. GLD was in an uptrend. It pulled back. It made a low below the blue line, and then it closed above it on the 23rd of March. This is all I need to know. I don't really even care what it is, as long as it fits my model. And this model is robust and it can work both up and down. Basically, it's an infinite model. So as a part of this model, we're building several robots which hopefully will become available soon to the investors. So stay tuned. Gold miners, next let me show you the gold miners and gold miners. I'm just floored, so congratulations, big congratulations to subscribers. Here's an alert on 25th of March and another one on 6th of April. 41% move, almost 42% move. So again, if you bought call options here, you basically have a home run here. It's probably, let me see, probably well over 100%, maybe 200% if not more, if you used options. So why did I do it? It's as simple as breakout. So again, I don't really care what it is. I just want to know, is it being traded? So if it is being traded, yes, okay. Close above the blue line right there where I'm hovering, 25th of March. Close above the blue line on 6th of April. To get these lines on your chart, just sign up at MasterCharts Trading, and I will open the door for you on TradingView. This is a TradingView interface. See where I'm hovering? TradingView. So, beautiful trade. Congratulations. Okay, finally, Bitcoin. So here's Bitcoin. It broke out, I think, on 29th of April out of a considerably long bear market. So I think the bear market began right there on the 24th of October 2019. Several huge opportunities to sell it, to short it, especially this last one on the 7th of March of this year. Yielded 56%. I wish there were Bitcoin options. I wonder if there are. A couple of opportunities to short again, but they were not successful back in early April. But now I think we're at, we broke out. I think we're in an uptrend now. So I actually went ahead and I bought a bunch of Bitcoin at around 8,900, 8,850 or so here. This was the average price. And I'm probably just gonna sit on it for a while. My stop is on, a reversal into the bear market currently at 6,363. Anything is possible, but this seems like a very bullish pattern, especially the way it came back. You can see on the 10th of May and on the 11th of May it came back and touched the blue line exactly at support. So this is a good looking chart, I think. I mean, we could just take off to the upside easily. I don't want to project, but it could be easily 50%. Whatever we dropped here, it could be duplicating the same thing on the upside very easily, maybe even more. So we'll see. This seems like an early stage breakout, basically, to me. Okay, that's it for this week's recap. Again, please head over to MasterChartsTrading.com. That's MasterChartsTrading.com, one word. So I have three different services. One is alerts. Alerts are basically a newsletter that contains a daily email newsletter that contains a bunch of various alerts about different stocks, commodities, gold, cryptocurrencies that we follow here at MasterCharts. And they're, some common ETFs, common small caps, common large caps, etc. If you don't really care about that, you just want to trade on your own, get the trading indicators. Trading indicators are these four lines: the green, the blue, the red, and the yellow line. And I tell you, at this price, it's $29.95 per month, or even less if you're buying yearly. You can recoup this in a day. I mean, if you play in options, for example, then it's it's very easy to recoup. So let me show you a options play I recently did myself. It's called KGC, Kinross Gold, and there's this. I opened here at 3rd of April, and then you can see it just took off in my favor. So this is already recouped. If you had one trade, like you just bought one option, you already recouped your investment to get the indicators, these indicators. So highly recommended. There's really zero downside. The only thing is you can just make tons of money, basically. All you need to do is just trust it. The system is perfect. You just need to trust it. Again, if you have any questions, I am here to help. Alerts and trading indicators. Best package deal. So basically ultimate package at $50 per month, or even less per month if you buy yearly. You not only get the indicators to trade on your own, but you also get the alerts. So you also get the actual examples, and it will be, I think, very helpful for you as well. So do sign up. Algorithmic trading. So this is a algorithmic trading interest list. It's forming, and this is in regards to trading of, for example, Bitcoin and other cryptocurrencies. So we're working to transition these lines into a trading robot, and then the robot will trade on your behalf and our behalf as well. And it's a work in progress, but it's coming, so stand by. So sign up for mailing list, interest list as well. Okay, that's it for this week's recap. Again, if you have any questions, please send them in. Thanks for watching, and have another great trading week. Bye-bye.